oh, that's a head and shoulders, that's coming down. Wrong, because there's, no matter what the pattern is, it doesn't matter if it's an inverse head and shoulders, if it's a rising wedge, if it's a falling wedge, there's no 100%. There's no, if you see this, then you always get that. If that were the case, we'd all be Brazilianaires, right? You'd have to just learn one simple rule. You made one simple trade. You only trade that, and you never lose a trade. That's not how it works. Everything can break either way. It's just probabilistic. These head and shoulders typically break to the downside. That's true. However, many times when they're in the context, that's why context is crucial. In the context of a rise and a fall, they actually break up. Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 25th, 2023. And this is what most influencers, most crypto analysts are missing. Here's why the next big move for Bitcoin and the rest of the cryptocurrency market is a big one to the upside, not to the downside, okay? We're going to go into that. Why most people think we're crashing right now, but we're actually not. So we're going to look at Bitcoin, we're going to look at the DXY as usual, and we're going to see certain patterns that may be fooling most analysts. All right, let's get into it. Hope you're having a great day. Okay, let's start off with this chart on the small time frame. And we're going to do this. We're going to go smaller time frame, then really large time frame. We're going to zoom out a bit, and then we're going to come back to this smaller time frame. First thing I want to show you is this. Okay, what happened in the past few days? Well, we put in this move. It's an ABC 3-wave correction, and this range looks like it was a wave 4 complex correction, okay? One of these, and then you finish out the impulse, okay? So I'm looking at 1, 2, 3, 4, whoops. 1, 2, 3, 4, 5, something like that, okay? That's a 5-wave impulse, A, B, C, boom, okay? Because you have an initial A wave, initial B wave, and that C wave is your impulse to the downside. Why am I saying that? Well, look at the time relationship between this declension and this ascension, okay? The up and down are related temporally in Elliott wave theory. In a proper impulse, you have a wave 1 and wave 2 being about the same length of time. So you could see 6 days and about 16 hours for the rise, 6 days and about 10 hours for the fall. And I'm counting to the end right here, right, as my orthodox low right there. So 6 hours and 6 days, 10 hours. So there is there's a comparability, right, between the time it took to go up and the time it took to go down. We want to see that in the case of a proper impulse when you're dealing with a wave 1, wave 2 situation. The other thing is, here, let's try that again. I messed up. The other thing is, if you take your Fibonacci retracement tool from the bottom of the rise to the top, what do you see? You see that the retracement comes down to, whoops, let's do that again. The golden pocket between the 0.5 and the 618. That's where you expect wave 2 to fall in a proper declension, a classical wave 2 retracement. It comes down between the 0.5 and the 618. That's exactly what we saw. The other thing I want to mention, and I always say this on the channel, right? If you're looking at a channel, like a price channel, there are 3 main components. For those of you subscribed, you'll know before I even say it. There's the bottom, there's the top, and there's the midline, okay? There's 3 components that are crucial to any channel, and each of them have to be tested. Obviously, the bottom was tested multiple times, okay? So we tested the bottom when we left the bottom. We've tested the top a couple of times, right? But the midline also has to be tested. This was not just a wave 1, wave 2 purportedly, but also a perfect retest of that midline right there. Okay, so I just want to put that out there. This is how I'm reading this channel that we've been in now for almost 40 days. Okay, now let's zoom out. Why do most influencers have it wrong? Why do most analysts have it wrong? I say most, not all. I hate those clickbaity titles where this is what everybody is getting wrong. No, not everybody, dipshit. Most people, perhaps, but not everybody, okay? So, most people are getting it wrong in saying that we're breaking down because what they see, actually, this point needs to be made on this chart, is a head and shoulders pattern, okay? And that's actually something that you always, well, you don't always see this, but you see this more often than not. This is tricky. It's not easy, but lots of people are seeing a head and shoulders, right, which is a bearish reversal pattern, and they typically break down. But the best way to think about head and shoulders, either inverse head and shoulders or, orthodox conventional head and shoulders, bearish reversal patterns, is they're reversal patterns. Okay, basically they're indicating price reversing from one way to another. Okay, either from being in a usually that reversal is after a consolidation. Okay, so because you can't reverse out of the blue, right? You always have to reverse after a consolidation, either an accumulation or a distribution. So these past 40 days of price action, this is the consolidation, okay? And this is our, I mean, you could say all of this is our reversal pattern, but if you look the immediate reversal pattern, it's that head and shoulders. And some maybe green analysts or people that may not be green, but they may not be very careful in their analysis may say, oh, that's a head and shoulders, that's coming down. Wrong, because there's, no matter what the pattern is, it doesn't matter if it's an inverse head and shoulders, if it's a rising wedge, if it's a falling wedge, there's no 100%. There's no, if you see this, then you always get that. If that were the case, we'd all be Brazilianaires, right? You'd have to just learn one simple rule. You made one simple trade. You only trade that, and you never lose a trade. That's not how it works. Everything can break either way. It's just probabilistic. These head and shoulders typically break to the downside. That's true. However, many times when they're in the context, that's why context is crucial. In the context of a rise and a fall, they actually break up. Okay, so if you were to look at this as just a head and shoulders, you would be missing the forest for the trees, or the trees for the forest. I don't know how to say that, but you know what I mean. You're not zooming out enough. You're not looking at the context. The context is such that, yeah, it looks like a head and shoulders, but it's not actually a head and shoulders. It's more like a rise and a retracement that did not make a lower low, a consolidation and a continuation of this. Okay, so that's what we're seeing based off the time it took to go up and to go down, based off of the retracement level, based off of the support of the midline. And yeah, so that's the theory. That's why be careful with that head and shoulders read. Bitcoin is going to break down to the bottom of this channel. Be very careful with that. This looks more like a walk-off accumulation being in the final stages. And now I want to direct your attention to the high time frame read. When in doubt, zoom out. It's always very nice to gain perspective on the chart, okay? This is the weekly time frame, meaning every candlestick, every bar equals a week's worth of trading. This is why it's prudent and I think wise to be bullish. And it should have been so for quite a while, because you've been forming these bullish reversal patterns. One second, let me get this tool out. Guys, if you're getting value, like, share, and subscribe. Bullish reversal pattern, inverse head and shoulders right there. I've pointed that out a ton of times on the channel, okay? You want to be bullish here. And obviously, this has served us well. Bitcoin's up maybe 60, 70%. It's a modest gain since the beginning of the year, but it's up nonetheless. Now, the other thing that's very clear to notice on the weekly time frame is this right here. This neckline. This is the neckline of the inverse head and shoulders. I've also pointed that out many times on the channel. Furthermore, now that you have a neckline, you have a retest of the neckline. You always want to retest a neckline, obviously, especially a neckline that is held for so many hundreds of days, yeah? Because this is the bear market consolidation right here, this inverse head and shoulders or bullish reversal pattern. So this has been retested quite thoroughly with this three-wave move. And here we're at the bottom stage or the end stage of this retest, the retest of the neckline. So it's very, very likely that we move up from here. Furthermore, if you take the height of this purported inverse head and shoulders, right? So you're looking at technical targets, right? This is pattern analysis. You look at the height of this inverse head and shoulders, this reported head and shoulders, you superimpose it from the side of breakout, what do you get? You get a move that's a swift move to the $40,000 region, okay? Now, this is a weekly time frame. It's not super specific, but I can tell you on the smaller time frames, that target more specifically is $43,000. This is where I see Bitcoin going in the coming days, and I think it's going to be swift. In the past, on this channel, past few days, I've been talking about 32K, 32K, 32K. It is true. 32K, which is the resistance, the next significant resistance, and that has proven resistance for this three-wave move. That is true, and that is actual. But we may blow right through that because it's been tested once, been tested twice. This will be the third time. And a lot of times, third time's a charm, you'll go right through it, and what you'll do is retest it as support. If you're making a strong move up, you'll retest it as support on the retracement. That retracement would be a 0.5618 or golden pocket retrace of 32,000 if you hit 43. The next really important thing I want to point out, and that you can see very clearly on this chart, is that this is very clear diagonal resistance, very important diagonal resistance. This is actually something that's never happened in Bitcoin's history. Okay, let me zoom out and show you. So this is my master chart of Bitcoin. And what's that mean? That basically means I tried to find a chart of Bitcoin with the most data possible to make my master plan. Okay, obviously you can make these plans, but it takes a while to play out. So I made this years ago, okay? And it's still active because it's on weekly time frame and it takes a while to play out. Now, as you can see, there's a clear channel that Bitcoin's price action has created since 2013, okay? And that's designated by this blue channel, okay? And in this blue channel, you can see we've gone up and down and up and down, up and down, but we've respected the resistance and the support levels of this channel. Except, now let's go back to where we were. In the most recent past, we actually dipped down below this channel right here. This was the first time in Bitcoin's history, or since 2013, okay? Since 2013 that we dipped below this channel, and everybody thought, oh, that's a death knell. Some analysts are saying, we've never dipped below this channel. I think that's coincidence with the break of the 200 MA or EMA or whatever. But it's okay. Channels we know are wicked beyond or dipped below. That's not that big a deal, okay? If the channel is intact, or if the channel is true, usually you regain the channel. And if you're going to break it, what you're going to do is you retest it as resistance and break down, or retest it as support and break up, okay? So we're at the bottom of this channel. This is clear resistance. This is a 10-year resistance right here, right around 43K, 40,000. So that to say this, okay, all that explanation to say the next major resistance, I know we said 32,000 was major resistance. You can qualify major resistance. The next, for real, not playing, we're definitely getting a retracement. Once we hit this, is between 40 and 43K. I think more specifically on the smaller time frames, it's around 42 to 43K. That's when you can expect Bitcoin to put in a move like this, okay? Retesting our $32,000 level. Okay, let's jump down to the smaller time frames because I just wanted to show you this 10-year resistance. It's hard to show on the daily time frame. You really have to see it. You really have to zoom out to understand where it's at. But you see, the technical target of this inverse head and shoulders is almost perfectly right at the bottom of this 10-year channel. Okay, now let's go back to our smaller time frames. Guys, again, if you're getting value, please like, share, and subscribe. I don't see anybody else doing this. Now, on the smaller time frames, what we want to do is going to go on the daily time frame and look at the same thing that we've been looking at, okay, to get really, really precise with that next target around 43, okay? Again, what you want to do is take a few things. You want to get targets a few different ways. I think the first way you do it is take your technical pattern target, right, of this inverse head and shoulders, right, superimpose from the side of breakout. You get thereabouts 43K, okay? That's your first. The second thing you want to do is you want to take the 0.618, right, because the phi ratio is very important, right? It's going to be resistance when you're below it, a support when you're above it. We're below the 0.618 of this declension right here. So I'm going to take the length of this move down, and you can see that the 0.618 is around 40,000. But again, you can wick above a little bit. That's still true. 42 to 43, I think, is still where we hit it. So a couple things are telling me, right? 42 to 43. On this chart, I'm seeing with the Fibonacci, with the technical target, and then on the larger chart, I'm seeing that 10-year resistance, 42 to 43. There is no way in hell, when I say no way in hell, I say it's very improbable, okay? Understand what I'm saying as an analyst. I'm just speaking loosely when I say no way in hell, okay? No way in hell Bitcoin just flies above this level. It's not happening. You're going to get a reaction at 42 to 43, a significant reaction. And again, I believe that significant reaction is going to be one such reaction, okay, retesting that ever so important resistance of 32K, okay? 32K is not necessarily going to be oh no. A lot of people probably think that because we haven't moved in a while. It's understandable. I believe, based off of the analysis I've just presented, it's going to look something like this. We fly through. A lot of people are going to be in disbelief. Wait, 32 was supposed to be resistance. Why did we go through it? We're going to come back. So you want to take profit, not financial advice, but financial advice around 42 to 43. Not just on Bitcoin, but the rest of the market. Okay, now let's have a quick look at the US dollar currency index. This has been the thorn in our side. This has been why the market's been so crabby, okay? And I want you to really understand, well, first and foremost, everybody understands the relationship between Bitcoin and the US dollar currency index. And if you don't, really, really quickly, I only show this once or twice because I've showed it so many times historically on the channel. But just do this yourselves. Don't take anybody's word for it. Do your own fucking research. That's the best way to learn. That's the best way to trade. That's the best way to establish yourself as an investor, as a trader, as a speculator. Look at the US dollar currency index. Look at Bitcoin. Chart them for as long as you can. Get as much data as you can for each asset, okay, for each chart. Superimpose them. Try to line up the times, and you're going to see, just like you see on this chart, that they're almost perfect mirror images of one another. What does that mean? They're inversely correlated. When the DXY goes up, Bitcoin goes down. DXY goes down, Bitcoin goes up. DXY is the money mover. It is the liquidity, okay? First the DXY, then Bitcoin. Dollars are used to buy Bitcoin, not the other way around. Dollars are used to buy pretty much everything. Say, okay, so this is why the DXY is so important. This is why I look at the DXY for those of you who don't know. Now, the dollar currency index, what is it doing? Whoops, wrong chart. Well, for the past, 2 months? Ever since July 17th, July 18th, right? 70 days now, 65, 70 days, 69 days, nice. It's been in this move right here, okay? It's been in this move right here. And we've been trying to read this. And, this is, I love, if you've been following my work, you've been seeing me struggle with this. And this is true. This is what actual technical analysis is. It's not like I have the answer and it's like this and it's going to happen like that. No, it's like I'm going to take my best stab at what the hell is going on this chart, And with more information, I'm going to refine the read. I'm going to gradually refine the read and actually figure out what the hell is going on. But it's not about being right the first time or even right the second time. It's just trying your absolute best, being honest with yourself, seeing where your chart your trade plans or whatever you've charted breaks and doesn't make any sense. It's not about this is it and I'm gonna prove it to myself and lying to yourself and just trying to be right. You want to be rich, not right. Okay, so you'll see I've been flexible with this, not too flexible, but seeing okay that happened, it must not be this. So this is my latest read on what the DXY is doing. You see, for the past 2 months, it's going up. So when I zoom out, this is what I see. And I think this is quite clear. Okay, I try to keep it simple. The simple explanation is usually the correct explanation. This is what I see in the US dollar currency index. And I'm going to just look on a smaller time frame, and then I'm going to zoom out and try to make sense of it in context. I see an A wave, I see a B wave, and I see a C wave. Okay, I see a flat correction. That's what I see, a flat correction. Okay, so I labeled that as such with this yellow sort of flat correction marker, right? And I mean, this is a quintessential B wave, right? A, B, C, right? 3 waves, 5 waves, or some variation of 5 waves, impulse, right? Your C wave is always the impulse. Now, we are at a resistance, but it doesn't mean we're going to break up. We're not going to break up a little, and I think we are, and I'll tell you why. So now, let's try to make sense of this flat correction in the whole scheme of everything. And again, understand that whatever happens here, for analysts thinking that we're just going to keep going, understand that this is at resistance. It's at the resistance, which is the base of this head and shoulders that broke down, okay? It's at a resistance in terms of our momentum. If you look at most high time frame momentum indicators, will show you it's overbought on the weekly, overbought on the daily, so we're overbought on the 4-hourly. Like, it's looking to come down. Question is when, question is where, okay? Not if it's bearish or bullish. It's not bullish. There's nothing bullish about this, because even if you count the past 2 months, this has been a bullish or bearish rally, meaning it's a rally that's gone sideways within the larger context of a sideways move, okay? That's pretty much it. So why do I think we still have a few pips to go? Because I'm seeing this as being a 5-wave move, and I'm seeing this as being a 3-wave retracement. And so if I'm looking at that, I think zigzag. For those of you who know anything about Elliott wave, a zigzag is a 5-3-5 move, meaning 5 waves, 3 waves, 5 waves. Okay, so that's what I'm looking for. Now, why do I think we have a little more to go? It's because these intermittent 3 waves have to reach a minimum of the 0.5 Fibonacci retracement of the preceding 5 waves. So if I take my Fibonacci retracement tool from the top of this purported 5-wave structure all the way to the bottom, I see that we haven't yet reached the minimum retracement of the 3 waves of a zigzag. So I believe that we're going to come up to at least 106.8, 106.9, thereabouts, before starting this. And this right here, those 5 waves are what are going to take us up to 6 figures. And that's another video. We don't have time in this video, but that's another video. This is going to start off with a move to 40K, 43K, retracement down to 32. And then we're going and going and going and going, and people don't see this. And I'm just going to say a few words about this. People think of the halving, and they look historically at Bitcoin's chart and say, we fall into halvings, meaning we're always coming from up, down into the halving, and then once we hit the halving, we consolidate and move back up. True. But what people don't understand is that it's still possible to fall into the halving, but we have time to fall from higher heights. It doesn't make any technical sense that we fall from these levels. And I think a lot of analysts are saying that where we're at right now is where we're going to fall from into the halving. That makes absolutely no sense. Meaning, wherever we're at right now at 26K thereabouts, we fall to like 10 to 12K or something ridiculous, and then in 2024 April or March, whenever the halving is, we go up. That makes absolutely no sense. Again, that's another video. So basically, that is my analysis today. This is why I'm not only looking for a quick move in Bitcoin to 43K, which is only a 60 to 70% move, but in the altcoins, that is a much nicer move, and you can already see, if you're paying attention, some, not many, but some altcoins have started to run. Okay, on this watch list, there aren't many. Let's see if there are any in the general watch list. Let's see. Let's order it by percent change. And we have one or two, okay? We have Moonbeam GLMR. That's moved 44%. We have Clover that's moved 10%. This is coming in the next few days, okay? This is coming in the next few days. I do expect a retracement by the end of the week, especially since we have the full moon on the 29th, okay? And obviously we're going into the weekend. Weekends usually bear out retracements, but I'm expecting a very bullish week, and a lot more bullish than most people think. Guys, that's my analysis for today. Hope that was good. Hope that was interesting. Hope that was insightful. If you got value, definitely like, share, and subscribe. And I'll see you next time.
All is well.